We all know the quiet dread of having to look at your family and tell them no to something they need, simply because the bank account is empty. The ideal financial state is having enough reserves so that when life happens, whether it's an upcoming college tuition, a medical emergency, or even a well-deserved family vacation, you can handle the obligation without a spike in your heart rate. You can reach that state this year. Here is a 9-step financial operating system for 2025 that builds a fortress around your wealth. And you won't need to quit your job, start a complex side hustle, or completely stop enjoying your life to do it. Lasting financial security comes from systematically plugging the tiny, unnoticed leaks in your daily cash flow. Let's fix those leaks, step by step. Step 1 is stopping the bleeding. Freeze your credit. Do not take on debt or use EMIs to buy depreciating consumer assets, like the latest iPhone or a flashy new car. Credit card companies rely on you defaulting to charge you massive interest. There are only 2 valid mathematical reasons to borrow money: if you are acquiring an asset that will appreciate in value, or if you are funding a business expansion that will generate more income. Step 2 requires confronting your memory. If you try to track where your money goes in your head, your brain will lie to you. It will highlight a few big dinners and completely ignore the hundreds of small, daily transport costs or subscriptions that are actually draining your accounts. The fix is a strict 2-minute nightly habit. Keep a notebook by your bed, and every night before you go to sleep, write down every single expense from that day, sorted by category. By moving the math from your mind to a physical ledger, you force financial reality over personal perception. Once you see the actual numbers on paper, finding hidden savings becomes a matter of basic arithmetic. This chart shows exactly how much a minor vice costs over time. Spending just 80 rupees a day on a habit like smoking doesn't feel like much in the moment, but over a year, that tiny daily micro-cost balloons into nearly 30,000 rupees. Step 3 is the bad habit swap. Quit the vice and take that exact daily amount and route it directly into a compounding investment. Since that money was already going up in smoke, you won't even miss it from your daily budget. Step 4 secures the assets you already have. Disorganized records carry severe financial penalties. If you miss a premium payment because you forgot the date, your insurance policy lapses. If an appliance breaks and you can't find the warranty card, you pay out of pocket. Set up a master filing system. Create distinct physical folders for bank records, medical documents, warranties, and insurance. On the outside of each folder, write the upcoming renewal dates in bold, clear text so you see them instantly. A master filing system acts as a defensive financial shield. It protects your wealth from completely avoidable late fines and forfeited claims. Step 5 is reevaluating how you present yourself. Paying a massive premium for heavily branded clothing means you are paying for a logo, not for the quality of the fabric. You are buying societal perception. Take a look at the wealthiest people in the world.
The top 1% intentionally avoid flashy designer logos. This understated approach is standard across the board. They let their work and their actual bank balances define their status, not their wardrobe. Step 6 is protecting your cash from invisible decay. Leaving your savings idle in a regular bank account means you are actually losing money, because inflation destroys about 6 to 7% of your purchasing power every single year. To outpace inflation, move that idle cash into high-yield fixed deposits. You can use aggregators like the Stable Money app to easily compare and book FDs that offer returns of 8.5% to over 9%. To do this safely, divide your funds into 5 lakh rupee chunks and place them across different small finance banks. 5 lakhs is the exact limit insured by the RBI, meaning your money stays completely protected while generating maximum returns. Wealth accumulates through optimized, inflation-beating investments. A branded wardrobe, by comparison, is simply a collection of depreciating assets. Step 7 addresses your household staples. Buying items like rice, detergent, or water in small, frequent batches is mathematically inefficient and costs you significantly more per unit. Calculate exactly how much your household consumes in a month. By taking those exact numbers and purchasing your essentials in bulk up front, you instantly capture a 10 to 20% discount on your groceries. Habit 8 reframes physical fitness. Spending on a gym or yoga class serves as a preemptive financial investment, securing your body's longevity to avoid far greater costs later. If you ignore your physical health while you are young,
you are guaranteeing catastrophic medical expenses later in life. You will end up spending all that wealth you accumulated just trying to buy back your health. Finally, step 9 looks at your career. Automation and artificial intelligence are rapidly making current programming languages, data entry roles, and traditional job skills obsolete. You must dedicate regular time to learning new skills. The goal is to build adaptability, the ability to pivot quickly when your industry changes. That adaptability is the only true way to secure your future income. Achieving real financial resilience requires aggressively protecting your 2 most valuable assets, your physical body and your future earning capacity. Sometimes people ask, why save so aggressively? Life is unpredictable and we could die tomorrow. This graph illustrates the reality of those odds. While sudden events happen, the statistical average lifespan in India is around 70 years. The math shows you are highly likely to live a long life, making long-term financial planning mandatory. This system isn't designed to strip joy from your present. You should absolutely enjoy your life. The goal is simply to extract the maximum possible value from every single rupee you earn. Look at the list and pick just one habit to implement tonight. Grab a notebook for your bedside ledger, or organize your documents into folders. And if you're ready to start beating inflation, check the description for a link to the Stable Money app to explore high-yield FDs. Start small and secure your future.